Hey folks, welcome back after that long weekend that was well needed. But now the fiasco starts all over again. It's like waking up to a dream every morning. So my name is Dan Frio. I do the rate update every day. I'm a mortgage broker serving the entire country. So if you're out there and you need assistance with a mortgage, please reach out to us. I've been in the business over 30 years, where our goal here is to educate and inform you guys everything real estate, especially when it comes to breaking down the finances. So what we try to do on the channel is just to explain to you guys what's going on with mortgage rates and specifically the whys. We're going to start kind of getting away from the debates on what's going on with housing and all this other stuff. I'll give you my context, but I basically want to just discuss the financing options of everything and be kind of your go-to person when it comes to anything in relations to a mortgage. So here's our website, therateupdate.com. Please join us there or visit us there, and you can get a hold of us many ways right over here. So let's get to it. Why are we here and what are we here to do? Well, again, like I said, what we're here to do is educate you guys and inform you guys everything real estate, but break down the financing pieces of the puzzle. So let's do that. If you're new to my channel, please check it out. You can also subscribe to my newsletter down below, and this is what you'll get every morning. So let's go over the context of what today is looking like and what's going on with mortgage rates, and it's not looking good so far. So let's get to it. We go to right here, and here's the newsletter. If you sign up for my newsletter down below, like I said, it's free. You're going to get a whole bunch of stuff every day to inform you guys what's going on in the market. Not the sexiest industry, but if you're in the business, probably a good tool to have at your disposal. Or if you're in the process right now of getting a mortgage and you just want to find out more and more and more, check out the newsletter. You'll find out a lot of information there. But let's go over, here's what I do every morning. I go over what's going on with the stock market, what's going on with the bond markets, and everything else to try to figure out, what's today going to look like and the rest of the week and going forward with mortgage rates. So normally we go across here, and if you see the Dow Jones down and down big like we're seeing today, it's usually a good indication that mortgage rates are going to get better. Okay, so basically here's the breakdown that we normally follow. Let me just do it real quickly. If stocks are up normally, what happens is bonds are down. Okay, and bonds, or a particular bond, is the biggest piece of the puzzle when it comes to mortgage rates. So let's discuss that and the basically the whys and the what ifs behind the scenes. So we look at here, and if you have money to invest, you're going to usually invest in stocks or bonds. So when one's down, usually the other's up. And I'm going to explain to you why that is important. So we're seeing today the market's getting hammered. Okay, a continuation of basically where we were 2-3 weeks ago. Last week was pretty nice. Let's go over to the markets right here. It's buying pledges, adherence to central bank independency ahead of the meeting with the Federal Chairman Powell. Federal Chairman Powell, he runs the Federal Reserve. So they're trying to combat inflation that you're seeing over here and everywhere that's just running rampant. If you also haven't seen, home valuations are up 20% year over year. So if you're still the naysayer sitting on the sidelines, is it going to come back? Yes, it's going to come back. Is it going to crash? Well, it depends on what your definition of crash is. But we're not going to talk about that right now. We're going to talk about what's going on in the financing piece of the puzzle. So let's go over here. Here's the economic calendar, and these are things that may or will most likely affect what's going on with mortgage rates and the stock market and bond market. We go through here, and yesterday we observed Memorial Day. Today we had the consumer confidence come out. How it's coming out higher than expected, I have no idea. I don't know about you, but I'm not hugely confident about the economy in the US. Then the rest of the week we have some news, and let me explain to you on each one of these and how this might affect what's coming up. So we have the PMI manufacturing. How much is what does the manufacturing look like? Is it going really well? Is it starting to slow down? What's happening? I have neighbors in logistics, and they're saying, man, we're seeing a massive slowdown. Usually logistics is the first piece of the puzzle that starts to see the pullback in our economy. The Jolt Index, what the Jolt Index is, it's basically the number of job openings. Okay, there was expected, or the previous month read 11.54 million job openings. Expectations is for 11.4. We will see, and we'll see that tomorrow. Next piece of this puzzle is the employment, non-farm payrolls, ADP, initial jobless claims, crude oil. Let's break down some of these components and why we watch them. The Federal Reserve, that's who we're all watching. They have two mandates. One is price stability, aka inflation. The other one is full employment. So let's go back to the calendar and let me explain to you why we watch these things, okay? So the next thing is you can see, well, let's go back through here. Manufacturing, how much is being manufactured? Is manufacturing slowing, increasing, what's what? The Jolt Index, again, remember, one of the mandates of the Federal Reserve is maximum jobs. So why is there 11.4 million job openings? Then we have ADP employment numbers, initial jobless claims. Do you get what I'm saying in this piece? That's the employment numbers, as well as down through here. The other piece of the puzzle is inflation. Well, crude oil is a major role in inflation. That's why we watch this stuff. So you can see the rest of the week is basically loaded with things that will, I say again, will affect your mortgage rates. So let's go to why you're here. Here's mortgage rates. This is where we actually closed Friday because Mortgage News Daily hasn't had time yet to compile all their data from lenders all over the country to let us know where the average mortgage rate is right now. So this is what they come up with. This is Mortgage News Daily. I use this, and I use it for you guys to explain kind of what the market is doing overall in general. So for example, if you see the Dow Jones, like today, it's down 250 points, most likely you're going to open up your portfolio, your stock portfolio, and say, I'm down. Okay, so you get it? When Dow Jones is down, most likely your stock's down. When we see the mortgage-backed securities market or mortgage rates in general, when I go over those with you, if mortgage rates are up for the day, no matter what rate you're getting, it's probably going to be up even, unless you locked in. So I want you to understand kind of what's going on. So the next day, if you got a quote one day and the rate's 5, and then the next day you get a quote and it's 5.25, it's like, why? Again, our goal here is to answer the whys to all this stuff. So let's get back to it. Here's where it is. So let's go over where mortgage rates are for today. If you're new to the channel, I'll explain to you how we read this cell and then we'll go across it. This is the 30-year fixed rate. It's coming in right now at 5.25. There is no change from the previous day. Okay, close on Monday. And this is the 52-week high and low. You can see we're almost doubled from where we were previously on the low. This is the chart, the 10-year chart. You're seeing we're in uncharted territories. And this gives you the sentiment of the day. What's the trend? Is the trend good or bad? And we'll put this all in context here in a second. So let's go across this in detail. The 15-year fix is coming in at 4.72, no change. The FHA, we lump these in right here into government loans. The government loans or sponsored loans are FHA, VA, and USDA. So those rates are coming in at 4.64, down 0.01. We reference as 1 basis point. Okay, the 30-year fixed is coming in on jumbo is coming in at 4.61, up 1 basis point, and the 5/1 ARM is coming in at 4.43, also up 1 basis point. Well, the negative sentiment right here. Why is there negative sentiment? Well, the MBS market is taking it on the chin today. Okay, this is that bond I was talking to you about. This is the bond that its yield is the biggest component or the biggest piece of your mortgage rate. Okay, so as this is what's happening to the price of the bond. So again, if you're a newbie here, we follow this. This is giving us the direction of what our rates are doing. So when this is down, that means the price of a mortgage-backed security bond is down. Thus, it drives up rates because as the bond price goes down, mortgage rates go up. Let me just do a scenario for you guys, the newbies out there. Here's how it works. Let's say as the price goes up, the yield comes down. Okay, well, let me explain it to you. We have a bond, and it's a mortgage-backed security bond. The next year when I turn in my bond that I'm buying today, and I'm going to show you how I did it, they're going to give me $100 back. Okay, so what happens is today I'm going to pay $50. I'll pay a low price, half the price. So I pay $50. In a year from now, I hand it over to the investor and they pay me $100 back. What's my yield? Okay, what's my rate of return? What's my interest rate? 100%. Okay, 100%. It doubled. Okay, well, let's pay a higher price to show you how a higher price drives down the yields. So what we do is, let's say in this scenario, we pay $100. So I give you $100 today. A year from now, you give me $100 back. That doesn't make any sense because what's my yield now? 0. Okay, do you see how if I pay a higher price, it drives down the yield? So now my rate is 0. So my mortgage rate would be 0. Well, that doesn't happen, but I'm just showing you how when we pay a higher price, the yield changes. Okay, so that's that piece of the puzzle. So this is why we watch the mortgage-backed securities. And this is bad for today. Let's refresh it because I haven't refreshed it since we started. And it's even getting worse. So I used actually a different system than this. I just used this system because it's easier for you guys to follow. But I used a more in-depth analysis, and I'll show you that chart right here so you guys can see what I see on a daily basis. This is what I monitor on one of my screens all day, every day, because I want to keep a tune on what's going on in the markets for you guys. So that is the morning, my morning report to let you guys know what's going on with mortgage rates and the whys. But I'm going to come back later this afternoon. I need your help out there. If you're an attorney and you're in the Orlando area, I need to talk to you. We have a client that is in desperate need of your assistance today. So if you're watching this or know anybody that might be able to assist us, please have them call in or email me because I need their help today. We are trying to help an individual that we have financing on. I won't go into details, but we need your help. So I'm calling out to the YouTube family for that. Other than that, God bless. We'll be back today at 1 o'clock to do our YouTube live to answer any questions that you guys have. So we look forward to seeing you there. Take care. See you in a bit.